Stocks falling for a second day amid growing worries that the United States and China are not going to be able to reach a trade deal. Take a look at this. The Dow down 220 yesterday. And President Trump says that he does not plan to meet with China's president as U.S. tariffs are set to increase on March 2nd. The selling began after White House economic advisor Larry Kudlow on Fox Business said that the United States and China are still far apart.
The president has indicated that he's optimistic with respect to a potential China trade deal. But we've got a pretty sizable distance to go here. To quote a colleague of mine, we have miles to go before we sleep.
Miles to go. Let's bring in Riley Walters, a heritage policy analyst on the Asia economy and technology there. David Ragland, CEO and investment strategist of IRC Wealth. Guys, good morning.
Good morning.
Good morning.
Riley, I want to start with you. You know, there has always been kind of a fear as these negotiations have continued that the Chinese are really not willing to make the changes that the U.S. wants. Larry Kudlow made that statement on Fox Business. Markets took a hit right after he said that. Is that the case? Are we that far apart?
I mean, we were that far apart a year ago. We're going to be far apart 3 months from now. So the question is, do we want to continue the tariffs for another 3 months or don't we? I think, the market was reacting to the poor signals from the White House that potentially there might not be a deal by March 2nd. Now, at the end of the day, it's always going to be a deal amongst the presidents. So if President Trump and President Xi can't meet before March 2nd, we might not have a deal. We also might have an extension, but I think the markets are showing they want the deal.
They did, and I think there was optimism on that, David, and I think especially in January, that was at least a part of it, despite the shutdown. But now it looks like, I mean, look at the pressure we've seen on like the semiconductor space, for instance. Look at the pressure that we have seen on a lot of these technology companies that are very dependent on the Chinese market. All of that is going to go south. How much of a hit do you think the markets could take if the news doesn't turn around?
Well, if we don't get a Valentine's Day gift next week or the following week, we could easily go back and test the lows that we saw right before Christmas. So we could be 10, 12% lower from here if the market really gets upset, because obviously with a slowing economy, that's not good for the market long term.
David, but the NASDAQ as of yesterday, and this is before the big sell-off, was flirting with exiting the bear market. You're saying we could easily go well back into the bear market, especially on the tech-heavy NASDAQ.
Well, no question about that. I mean, the market has had tailwinds over the last, especially the tech stocks have had a big tailwind. You've had the Fed come to the rescue. You've had the shutdown now completed. You had positive comments out of Trump and Washington as far as the trade goes. So now you don't have the stimulus of the Fed coming to the rescue anymore. And obviously the market coming so far so fast, a retest out of these levels is sometimes happens on a regular basis.
There's a lot of voices now in these negotiations, Riley. The Wall Street Journal reporting that former Treasury Secretary Hank Paulson, he is now trying to push for a deal. Stephen Schwarzman from Blackstone, he is trying to push because they know what is at stake for the markets. But again, it goes back to the Chinese. How much good faith are they going to bring? And are they really going to be willing to open up their markets to U.S. companies?
What's interesting about this is I think they are willing to open up to a certain degree. Obviously, everyone talks about what they can give the United States sort of in the immediate term, the purchasing of more goods. The issue is with the structural reforms. I think that they can give the United States some structural reforms sort of at the front end. But really, the Chinese want to, sort of decouple the tariffs from actually showing that they've changed China. They don't want to have other countries see that the United States has had success in changing China's structural reform through the tariffs. So they're going to try and sort of through these talks, for political purposes, sort of decouple the talks from the structural reform.
The markets are going to see right through that, unfortunately, but at least as the story will end for now. Well, we've made a for effort if this doesn't work out. Riley and David, guys, thank you very much for getting up and covering this for us. We appreciate it.
Thank you.